Hello and welcome to 3Q. Today I'm talking with Kevin Monserrat of Consilience Ventures. Hello Kevin, and thanks for appearing on the programme.
Thanks very much, David. Delighted to be here.
Good to see you. How do you think the pandemic has impacted the UK venture capital industry?
I think that it's too early to see the real impact of pandemic in the UK VC sector for now. I think the results will certainly be visible within the next 6-12 months from now. And I suspect it will at least last for 36 months. But if we're looking at what happened in China, in our peers in China, there was a 30% drop in venture capital deals in Q2, which is roughly equivalent to Q3, Q4 here in the Western world. So we can expect an equivalent impact, at least, I believe. And the fact that there will be less capital available will force entrepreneurs to create great companies without counting on VCs. And that's going to be the reality of things. So what we are saying is there's a cultural shift taking place. Startups are reimagining their relationships with the traditional venture capital funding model, and they are starting to look at beyond cash, because cash will be even scarcer than what it used to. And just before the pandemic, I think something happened very, very interesting to see what's happening in the US. Reid Hoffman investing $30 million in a company called Sweat Equity Ventures. So it's just showing that there is now some big money coming into alternatives to VCs, given that it only targets a very small subset of the venture cap of the startup economy, if you like.
Okay. And what investment strategies would you recommend for the UK VC industry going forwards?
I would recommend diversification. I would recommend huge diversification at early stage in medtech, fintech, and sustainability, and diversity, financial inclusion. Those are the big topics. As an entrepreneur, I really see that there are plenty of opportunities there. But we should not forget that the diversification is key and should also be looked beyond the UK, if I may, because we still in the middle of Brexit, where most people have only thought about COVID for the past 4 months, but in reality there is still Brexit watching us right now. And before the COVID situation, there were already angel networks seeing investors being a lot more frugal. So I think there is a mix of things here that could have a huge knock-on effect on too concentrated portfolios, if you like.
Very good. And how do you think UK tech industry can bounce back from the pandemic as we now come out of lockdown?
It's a very interesting question. If I had this, I would put all my money on this. So I think the UK can definitely outsmart other nations, first of all. UK has the talents, we've got the culture, we've got the expertise, we've got the diversity, and we've got the capital to create amazing breakthroughs. We just need to think differently and avoid making the same mistakes, repeatedly trying to copy the Silicon Valley model. I think that's very much one of the key takeaway here. Bouncing back would not bounce back the same way that the Silicon Valley will. So I think innovation and entrepreneurship being all about expertise and skills to coming together to solve big problems, we are going to see maybe a lot more companies looking at early revenues and profitability more than focusing on raising money. So I think how the UK economy is going to bounce back will be to focus a lot more on Zebra, on companies that have a clear path to profitability, and not being just acquiring huge amount of customers like we've seen with Uber and Airbnb and those big unicorns spending billions in marketing a year. and then of not being able to sustain a crisis like we've observed. So that's the interesting bit that we've been observing, and that's pretty much where Consilience Ventures is positioned here. We are, as we are tokenizing the venture capital ecosystem, essentially allowing the startups to bring the best people on board without raising capital. It makes us very different. It makes us co-investing really well with other investors, but because we convert the shares of every investment we make in an equity-backed security token that is indexed over the entire portfolio, well, one, it's more liquid for investors, it's more diversified for investors, and it's obviously less risky for startups because it's there. You know what you get when you convert your shares into our digital assets, and you know that you can trade it for cash and services. So everybody wins, and hopefully this is going to help to contribute to the bounce back of the UK economy.
Kevin, that was incredibly insightful. Thank you very much for appearing on 3Q. Thank you.
Likewise, thank you very much.